Happy Halloween, everybody. I'm your Florida Mortgage Caddy, and today we're digging up 3 terrifying lending myths that keep haunting borrowers year after year. These myths have scared off more home buyers and small business owners than high interest rates ever could. So let's bust them once and for all. This year's lending market has been unpredictable. Rates climbed higher than expected, and underwriting rules got tighter, and both Florida and Colorado borrowers are feeling the squeeze. The SBA 7A average rate for quarter 4 2025 is 11.25%. VA loan updates in effect since August 2025, and Florida SBA 504 loans are up 14% this year. But the biggest problem isn't the rate or the rules, it's the misinformation that keeps people from even trying. So let's tee up the top 3 myths that are still haunting borrowers and how you can outsmart them. Myth number 1, SBA loans are easy to get. Nope, not in 2025. That's like saying every putt inside 10 feet is automatic. It looks easy on paper, right? This summer, the SBA's tightened its underwriting standards, and the new SOP requires deeper documentation, proof of citizenship or LPR status, more detailed ownership records, and clear cash flow projections. If your numbers aren't dialed in, your file will get kicked back faster than a bad drive into the water hazard. In Florida, we're seeing high SBA 504 activity for hotels, logistics hubs, and medical practices, but every deal needs stronger financial justification. Whereas in Colorado, the energy and tech sectors are booming, but lenders there are taking longer to verify revenues and projections before approving new debt. So yes, SBA lending is powerful, but it's not a free mulligan. You've got to play the full hole. Myth number 2, rates are about to drop, so I'll just wait it out. That's one that's been haunting inboxes all year. Everybody wants the perfect timing, but in lending, waiting can cost you the deal. Even though inflation cooled a bit this fall, the Fed's holding rates relatively steady. So small businesses and real estate loans haven't budged a whole lot. If you're in Florida, waiting could mean losing out on a property that's still appreciating in Tampa or Orlando. And in Colorado, high demand around Denver and Boulder means waiting could push you out of the market entirely. Think of it this way. If you wait for the perfect wind and the perfect club, you'll never swing. Sometimes the best shot is the one you take right now, with strategy and confidence to back you up. Myth number 3. If I've got a great business idea, the lender's gotta say yes. I wish it worked like that, but lenders don't fund ideas, they fund execution. Strong concepts matter, but in 2025, lending is all about structure. You need clean bookkeeping, a solid debt schedule, and consistent cash flows. I've seen incredible entrepreneurs get denied because their QuickBooks weren't reconciled or they had unpaid tax filings. In Florida, restaurant and hospitality owners are thriving again, but lenders want to see 2 clean years of statements before they'll finance an expansion. And in Colorado, startup founders are creative and fast moving, but they need to show stable contracts or subscription revenues before banks will feel comfortable lending. In golf, you can have the perfect swing theory, but if your setup's wrong, that ball's going out of bounds. Lenders think the same way. Show you've done your setup work and your shot will stay on target. And here's a bonus myth that deserves its own coffin. It's that personal credit doesn't matter for business loans. Well, it does. Every SBA and most commercial lenders are going to pull your personal credit report. And it's not the only factor, but it still plays a big role. Even if your business is strong, a weak personal credit profile can raise red flags. You need to keep your credit utilization low, your payments current, and be ready to explain any hiccups. Let's recap the monsters under the bed. Number 1, SBA loans take real preparation. Number 2, waiting for the perfect rates might cost you opportunities. Number 3, great ideas still need structure. And number 4, yes, personal credit still matters. The Florida and Colorado markets are both strong heading into 2026. They're just different. Florida gives you the smooth fairway with tax advantages and business incentives, where Colorado offers high growth potential but a few more hills to climb. So this Halloween, don't let these myths creep into your business or homeownership goals. Prepare, plan, and play your shot. I'm your Florida Mortgage Caddy, guiding you through the greens of mortgage and business lending, even when the course looks haunted. Have a safe and fun Halloween, and I'll see you guys next week.